Welcome back. Now, according to the World Gold Council, gold demand hit a new record high in the fourth quarter. This thanks to sustained central bank buying and growth in investment demand for the yellow metal amid soaring prices. The World Gold Council's chief market strategist, Reade, joins us to dig through the organization's latest gold demand trends report in greater detail. John, thanks so much for your time today. So, whenever I hear about gold, all you think about is record prices, and that's record prices as well as, record highs. And that seems to be the case when it comes to the fourth quarter's report. Just contextualize everything for us as we get started.
Well, you're quite right. It's been record high prices in gold through the fourth quarter and actually into the first couple of months of this year. We're at all-time highs in gold, probably hit the fifth all-time high of the year today if prices remain at these levels. You picked up on the main factor that's been behind this in your introduction, and that's central bank buying. Mm-hmm. We've now seen 3 consecutive years of more than 1,000 tons of central bank buying, and that's running at double the rates that we've seen previously. Investment demand was also strong last year as ETF investors slowed their sales and actually started buying towards the second half of the year. Mm-hmm. Of course, high prices do have consequences, though. So jewelry demand fell because of those high prices, which is what you'd expect. So stronger investment demand, still strong central bank demand. We've got record demand for gold in 2024.
John, let's look at that central bank buying in greater detail. You did mention that we saw a pickup of central bank gold buying. Interestingly, buying ramped up even more in the fourth quarter, coinciding with Trump's election win. Would you perhaps say central banks were searching for more safety as Trump made a return to the White House and just the jitters that are connected with him being president?
That's certainly possible. I mean, I think it was very noteworthy that the People's Bank of China, the Chinese central bank, restarted its purchases in November, which obviously corresponds to the election. I think that lots of participants in the gold market are viewing the new U.S. administration as being, a step up in risk and uncertainty. And that's probably driving them towards making further allocations to gold. Risk and uncertainty is usually something which is very good for gold demand and gold prices. And I think that's something that's very much happening here at the moment.
Mm-hmm. And we touched on jewelry demand as well, which has been falling down 11%. Interesting to see how it's working itself out between China and India. Is the weakness in China just on the back of, the economic situation in that country?
I think that's absolutely right. So if you look at last year as a whole, global jewelry demand fell 11% in tonnage terms. But it fell much more than that in China, down about 26%. And I think the reason why Chinese jewelry demand underperformed is because of the weak economic sentiment within the country. But that also had benefits too, because we saw a decline in jewelry demand, but a big increase in investment demand. So, what's losing on one side in China is gaining on the other. But in terms of jewelry demand on its own, yes, India's jewelry demand last year exceeded that of China, and that's not something that we see happen every year.
Now, there's also been a resurgence of Western investors from about the second half of the year. Is there a particular reason behind this, John?
There's a couple of reasons. I think that the most important one for the long term is the fact that interest rates have started to come down in Europe and in North America. And as interest rates come down, investing in gold becomes more attractive. I think the second point, though, is that the gold price broke out at the beginning of March last year and traded materially higher, hitting 40 new all-time highs. I think that has dragged some investors back to the buy side via gold ETFs as well.
And how does that fare with, the buying from Western investors fare up against the buying from emerging market investors? Because it did seem at some point that emerging markets were buying more into gold than the Western investors.
I still think that's the case. Yeah. Western investors have returned, but they haven't returned at full strength yet. whereas emerging market investors, particularly China, India, and other markets, have seen better investment flows last year. So overall, if we look at physical investment demand, bar and coin demand, we've seen a bit of weakness still coming through from Western investors, but strength coming through from emerging market investors to leave bar and coin demand almost unchanged.
Let's look at the use of gold in the tech sector. That part recorded its strongest quarter since 2021. Do you expect demand there to continue to boom, considering the increased use of AI and just how much tech companies are plowing into AI investments?
It certainly has helped the demand for gold in technology. And I would expect that AI, plus all of the other expenditure that's going on in electronics, so data centers, people upgrading their mobile phones, their laptops, that's definitely going to help industrial demand or technology demand for gold. I do think people need to remember, though, that it's only about 6 to 7% of total gold demand. So we're never going to get to a stage where gold becomes a purely industrial metal. But if we didn't have gold in technology, we'd certainly notice the difference. Things would be heavier and would break more often. So gold's use is really important, but it is a small component of overall demand.
John, let's leave it there. Thanks so much for joining us today. That was John Reade, Chief Market Strategist at the World Gold Council.